Hey everyone, CPI came in a little bit hotter than expected. I'm sure you've seen the news and you're probably seeing it in your own portfolio. So, CPI absolutely draxed my portfolio today. And I'm going to tell you a little bit about why that really doesn't matter to me and why I literally just do not give a crap about the fact that I'm down today on this CPI news. Before you start to criticize me, I want you to sit there and really give this some actual honest thought and consider. Think, Mark! But I am being serious. If you think on a longer time scale, right, and I mean past just this year, 2024, think further. Think what's your investing time horizon? Think what happens when decades pass. Will you really care at the end of decades, 10 years from now, 20 years from now, what the CPI was in January 2024? I want you to put it into perspective for yourself. Think 20 years down the line. Will it have mattered to you that much whether Jerome Powell dropped the interest rates in May or June? Over the span of 20 years, how much difference will that really make to you? So, why change how you're investing today? Why sell? Why be fearful? Why not just view the small drop in stocks, a percent, 2%, whatever it was, as a chance to get a slight discount and just keep dollar cost averaging into your same investments? I realize that in the short run, it can be hard to tune these things out, and it gives the news commentators on CNBC and Jim Cramer and certain stock market channels something to talk about. And it gives them an opportunity to sort of feel as though they matter. But let me tell you,
it doesn't matter how it makes you feel.
that is to say, regardless of what specific method of investing you use, as you all know, I use a particular method of investing. If you are buying businesses and you're basing it off of their financial performance or what you're projecting their future to be, and you think that 20 years from now, this will be a stronger business than it is today, or you have a good idea of what the value is of the assets in the underlying business, will it really matter all that much in the grand scheme of things whether interest rates dropped a quarter point in May or if they dropped a quarter point in June, or if it took even till July? Like, how much will that really matter over the next 20 years? I don't think it'll matter all that much in the grand scheme of things. So I'm going to just continue to do what I do and tune out the noise. There are definitely businesses that are in the short to medium term more sensitive to CPI data and whether or not interest rates get lowered or not, banks and REITs amongst them. However, I think in the grand scheme of things, good underlying businesses will have their stocks reach what is a reasonable, fair value in the long run based on the fundamentals of the financial performance of the underlying business. At the end of the day, to me, investing is all about acquiring productive assets for valuations that are as favorable to me as they possibly can be. That means I'm looking to exchange as little cash for as much productive assets and future cash flow as I can possibly get my hands on. So if this temporary drop in stock prices lets me get even more assets for even less cash, because people are worried about a month or two difference in a interest rate decrease, I, for one, will happily take the win on that.
I'm by winning. I win here and I win there. Now what?
Say, please, please, it's too much winning.
If you're buy winning, make sure that you subscribe to the channel, like for the algo, make sure that you join me on Discord, follow me on Twitter, trying to get my first 100 followers. Links to all that's in the description. Consider being a member to support me financially. Take it easy, everyone. Have a wonderful day.